Philipp, thanks very much for joining us. The KGAL Core 5 Life is one of the few Article 9 residential real estate funds with a European focus. So what's the strategy of this impact fund? And has this found a positive response in terms of institutional capital?
The KGAL Core 5 Life Impact Fund is quite unique. There are only a few impact funds in Europe so far, and only a few pan-European residential funds. There are two topics for the fund. One is the housing crisis in Europe. There's quite a big imbalance between demand and supply in all of the metropolitan areas in Europe. And the situation is getting worse. Inflation is quite high, and financing costs have also seen quite an increase. So this will cut down development activity, and there will be also 13 million new households until the end of 2040 in Europe. So situation is really getting worse, especially for the young generation who cannot afford a home or have problems in affording to rent a unit. The second thing is that we have a climate crisis going on, real estate is one of the big problems for this climate crisis, but it's also one of the solutions for the climate crisis. And the fund is tackling both of these topics. We are focusing on affordable housing and also on creating energy efficient residential space. Feedback from our investors is very positive, especially because the fund is combining the big demand for residential as well as the increasing demand for Article 9 funds or ESG funds in the fund universe.
And the first acquisition was in Malaga, Philipp. How does that reflect the strategy?
Malaga is not very obvious for first investment for pan-European fund. You could think about Barcelona, Madrid, or other cities. But the good thing about Malaga is if you take a close look at the market fundamentals of Malaga, it's the sixth biggest city in Spain. It is very dynamic macro location. There have been a lot of tech companies opening branches there. And there's a big household growth in Malaga of about 5,000 units expected until 2030. So there's also a big imbalance between demand and supply. The whole Spanish market is still driven by owner-occupiers. There are only a few market participants there, and the offer is not of institutional quality. So this is a market opportunity for us. The property itself offered us a very good yield spread between Malaga and, for example, if you compare it to Barcelona and Madrid. And from an ESG perspective, it reached almost all of our ESG criteria. The environmental score is 95%. The social score is 87% of our ESG score. We have solar panels on the roof. 62% of the units are considered as affordable. We have car sharing space, electric charging stations, and there's an app for the tenant communication in place. So you can communicate with the tenants on sustainability issues and also on tenant related services.
And Philipp, how are you balancing delivering returns to your investors whilst at the same time delivering impact for the residents?
At KGAL, we believe that in the long term, the returns of properties with a strong ESG performance will be higher than for properties with a weak ESG performance. And the reasons are, of course, ESG regulation all over the world is tightening. So there will be naturally a higher demand for ESG compliant buildings. And we believe that buildings with a weak ESG performance will get something like, I would call it a brown discount. And in addition, if you create something like we did with the ESG scoring model, and you create a lot of KPIs, you are assessing during the due diligence process in the investment phase. You get a good sense of the weaknesses of the building, also of the risks attached to it. For example, we are asking during the due diligence phase, is there risk for wildfires? Is there flooding risk? What is the overall building quality for the tenants? Do we have community spaces in place? So there are lots of questions which form part of the future performance of the property. So we think by incorporating these questions in our acquisition phase and also in our ongoing management phase, that this will create future performance. This might, to be honest, cost us some performance in the beginning of the investment phase of a residential property, but residential investments should be considered as long-term investments, and in the long term, this will pay off. And one of the examples why it's paying off is also that the tenants will be much more satisfied with the properties, and also implementing these additions to the properties like solar panels and so on might cost you in the beginning some money, but it's easier to incorporate these things in the beginning of the life cycle of a property than rather doing it in a later stage, and sometimes then it's not possible anymore.
How do you see the sector trends in the residential markets at the moment? And I suppose, is this a real opportunity?
Yeah, we see a real opportunity for ESG topics. One of the trends is remote working. So, for example, in Malaga, we have created this co-working space. So the people can still separate their work from being at home, but they don't have to travel so far to their work. And this is really, from our side, a very smart solution which we've created. And it also keeps the rent small because you don't have to provide these spaces in your own flat. One of the other trends, we all have to implement more technology in the real estate business. So, for example, for our properties, smart metering is one of the ways to get awareness of consumption, and also to give very quick feedback to our tenants about their consumption and to build awareness for the costs. And the other thing is, most of the construction activity in the real estate business is still very old-fashioned, and technology should help us in cutting down construction costs so that rents are getting down a bit compared with the way we are constructing properties right now.
What's next in terms of the acquisition strategy, Philipp? I mean, where do you see the opportunities at the moment? Is this across Europe?
Yeah, we are looking across Europe. So we are investing all over Europe. We are investing in 7 locations, but other countries are also on our map. The market itself at the moment is quite interesting, I guess, for every market participant, but it's very challenging. So financing costs have gone up quite high, and I would say that the market is right now in a price adjustment phase. For us, this gives us more chances than risks. I would say the fund has been recently launched, so we don't have any history with market values which might deteriorate over the next 12 months. We have a fresh start. We can buy at higher gross initial yields than in former times. We have to be very selective because, as I said, there's a price adjustment going on, and we don't want to grab the falling knife. But there will be, like we've done with Malaga, there will be market opportunities also in this market. So there will be especially developers who might need fresh financing, fresh liquidity on their balance sheets. So there will be selling activities and for better prices than we've seen in the past. From a market perspective, all of the European markets are very interesting. But if I could make a wish, then I would like to go to Ireland. It's a very dynamic market, high population growth, high household growth, and there's a huge imbalance between demand and supply. And the Netherlands is also a very interesting market. We are looking at deals there too, because, and for us, it's very interesting because the Dutch market is one of the markets with the highest ESG expertise in whole Europe. So for us, there's also still some way to learn more about ESG and of ESG improvements.
Really interesting to hear about the strategy of the impact fund there at KGAL. Thanks very much for joining us, Philip.
Thanks a lot, Richard, for having me.